and I didn't receive a payout for I think maybe over a year until 6 months ago. Probably lost over £60,000. Just any money that I got to put in my account, blow it. But with the funded accounts, it made me think, let me risk less because it's still worth a lot because of the size of the accounts. I traded NASDAQ today, made $9 grand on the FundedNext account today, on a 100k account, Yeah, waiting, it's I think up 18% now on the 100k account.
What are your long-term plans and ambitions in trading, if you have any?
I want to stop trading. It's going to be worth a lot. But yeah, I want to quit trading. I failed for 5 years and you're crying about 1 year, like please.
People that are not into trading, they want to get into trading, I say don't.
Yeah.
Don't get into trading, you'll never make it. You have zero chances. The only reason why somebody could make it in trading is being stubborn.
That's
and
good.
if you're not stubborn, you'll never make it. Welcome to a new episode of Risk to Reward Radio, and today we are joined by Mr. Armash, a 23-year-old trader that only with prop firms alone, he reached more than $200,000 in payout. And we'll have a great conversation today. Thank you for joining.
Thank you for having me.
All right, so 23-year-old trader, when did you start trading? And tell us a little bit more about your background. First of all, you're from London, right?
Yes, I'm from London, yeah.
Tell us a little bit more about yourself, your background, and how you got into trading.
Yeah, so I started trading when I was 17 years old. Obviously, I didn't have a live account back then because you had to be 18.
Yeah.
So I would just be practicing trading on TradingView and demo accounts. And then when I turned 18, I started my own brokerage account.
Mm-hmm.
And then from there, I traded for maybe until I was 21. And after 21, obviously I was unprofitable this whole time on my personal account. After 21, I started going into prop firms.
Mm-hmm.
At 22, I believe that's where I properly actually got my first prop firm account, which was, I think, with MFF, my Forex funds, or my frozen funds now. So, yeah, that's where I first started. And I didn't receive a payout for, I think, maybe over a year until 6 months ago. 6 months ago was my first ever payout. And then after that, of course, it's just snowballed into almost $250,000. So.
And that was with?
It was between 4 different firms. So FundedNext, FundedNext, which is now Quantecal, FTMO, and ZamcoCapital.
Interesting. So 6 months ago, you received your first ever payout.
Yes.
And now you're around $250,000, which is crazy, like such a fast growth. So you mentioned you started 17. So, and from between 18 and 21, you just traded on brokers.
Yes.
And how did that go?
Probably lost over £60,000. Just any money that I got, just put in my account, blow it. But I've made that back now, so it's fine.
Part of the process.
Exactly.
All right. So, but how did you find out about trading? Because I hear there are many stories. Usually, people start trading because they see the lifestyle, they see some guru, they see Lamborghinis, whatever. How did you start trading?
I started trading when a friend recruited me to IML.
All right.
You learn how to trade, but it's like a pyramid scheme where you refer people and you get your referral fees.
Network marketing,
Yeah, literally. So after that, I didn't like it. I just thought, this is just nonsense. It doesn't work. But that got me into trading because that opened my eyes. Like, they're just trading things is a thing. I never knew about it before, but IML kind of had this basic trading education. Learned that, and obviously I knew that it was just nonsense what they were teaching because of their background, the whole pyramid scheme nonsense. But then that pushed me on to actually wanting to learn how to trade. So that's where I went onto YouTube and Instagram, looking at random posts, and then over time, trial and error. Finally, I found my edge.
Do you consider what you learned at IML Academy something useful, at least for the basics?
Absolutely not.
Not even the basics?
Not even the basics.
How to read the chart, candles?
No, they were talking about like harmonic patterns. I don't really understand that. I don't see the point. They just did, okay, fine. They did the most basic, like support resistance. This is a candle, and that's about it.
So they got you started?
They got me started, maybe the first 0.1%.
All right, and then snowballed.
Yeah.
So you then shifted into learning through Instagram and YouTube. So do you have any specific figure that you refer to as your kind of mentor on YouTube, or where you got most of your
No,
information?
I've never had a mentor or anything. It was just random, like, on the explore page.
Yep.
Random trading posts that will come up. I just look at one video, just go through random people and just see what this guy's saying, what's the other guy saying, and kind of just test it out again and again on the chart, see what works, see what doesn't, and then it was basically just that, just seeing random people, no actual mentor ever.
So you were in school when you first started, weren't you?
Yeah, so I was in college, going into university the year after.
And did you keep?
Yeah, I
going through that
continued
route?
study. I continued studying. I went to college. I did a degree in physiotherapy. Hated it, but I still had to do it because, it's a degree. Everyone pushes you to get your degree and stuff. So I thought, let's just go through with it. And I didn't have any alternative back then because trading wasn't working for me at that point. I was still unprofitable, so I kind of had to have some sort of backup, which was a degree, physiotherapy. If everything fails, I can still be a physiotherapist.
And when did you finish? When did you graduate?
2021, I believe.
So you were 2020.
I was 20, yes.
All right. So before starting with prop firms, you graduated.
Sorry, no, 2021.
So still before.
I was still 20, but turning 21.
All right. So still before discovering prop firms, you
Yes.
graduated.
Yeah.
And you were unprofitable, trading with brokers, hopping around, probably strategy hopping. Yeah.
Very, yeah.
Very. All right. And then you discovered prop firms. How did that change your approach? Did you start looking at trading differently?
I think I started being more aware of my risk, because before I would just full pour every bit of money in my personal account. But then now I knew that, I can't risk more than 10% max drawdown, 5% daily. So I was like, all right, now I actually have to risk a specific amount. But because of the large capital, it's still quite a lot. Risking, so if I had like £1,000 personal account, risking 1% was at £10 per trade. It didn't feel like much. So obviously you want to full port basically. But with the funded accounts, it made me think, let me risk less because it's still worth a lot because of the size of the accounts.
How can you walk us through your risk management with prop firms when live props them a bit, so that we understand a bit of the difference between full porting and your actual risk management on prop firms?
So passing prop firms, I risk my whole daily drawdown per trade. It's, I believe, the quickest way to pass and the most efficient. You only need 1 to 1.5 risk to reward, and you already passed phase one.
Yep.
But then once I'm funded, I reduce it to 0.25 to 0.5%.
All right.
Because at that point you've got the money, so keep it safe.
Yeah, and that's crucial. So we were talking about this also yesterday with the other guest. Essentially, people that get into trading, they like you did, and like everybody, almost everybody did. They full port on personal accounts, and they no concept, no of risk management or whatever. And then they come to prop firms, and they start actually seeing a bit of rules, but still. There are many people that still risk during life phase 1 to 2% a trade, and they keep burning and buying back. And not saying that that's wrong, but that's very, very different from what you're doing right now. So risking 0.25, which is actually way closer to actual professional trading than risking 1% a trade, because it's still a lot, especially if you have 10% drawdown.
Exactly.
That's 10% of your account. Yeah. So the risk or ruin, you don't calculate it on the 100% of the account. You calculate it on the 10% drawdown, and you'll burn the account eventually. So very nice approach, and not many people do that actually.
Really? Wow.
Yeah.
No surprise. I mean, most people fail, so no surprise.
The burns. Yeah. So okay, you risk management changed.
Yes.
Did you start looking at different approaches trading wise, leaving out risk management, like different kind of concepts, different trading funnel approach?
What do you mean by trading funnel?
Like for example, people like nowadays, everybody has strategies and stuff, and some other people have trading models. Some other people don't have neither one. They just trade scenarios. What's your trading funnel like? Do you have a strategy? Do you have many models? Did it change when you shifted to prop firms?
I think, when I changed the pair that I traded, when I stuck to NASDAQ, I found I became much more profitable. And then when I focused on liquidity sweeps and reversals on NASDAQ, I found that works the most on it. So when I was trading Euro USD or any other pair, I was trading through any currency pair. I found that liquidity sweeps with a reversal, it doesn't work as much as NASDAQ. But the moment I switched to it, instantly I just saw like 80% win rate. I just constantly winning.
So just trade NASDAQ?
Just trading NASDAQ.
But you were not trading NASDAQ with your personal funds?
No.
All right. Can you walk us a bit through your trading funnel, your strategy on NASDAQ? And I'm assuming you still use this today on your funded accounts.
Yeah. I traded NASDAQ today, made what, 9 grand on the FundedNext account today.
9 grand?
On a 100K account, yeah.
Congratulations, man. Congratulations.
Yeah, waiting. It's, I think, up 18% now on the 100K account.
18%?
Yeah.
That's quite a performance.
So for strategy-wise, I wait for NASDAQ to sweep an Asian high or a low, and then I just catch the reversal to the other side. That's pretty much it.
That's it?
That's it.
Right. Entry pattern?
Entry pattern is just break of structure. So, sorry, change of character.
All right.
So on the low time frame, 1 minute time frame, if we're pushing higher highs and higher lows, I just wait for a low to be broken, retracement into a fair value gap, take that sell.
Interesting. So you try to keep it simple. Essentially,
it's very simple.
Every day you're trying to do the same thing,
Yes.
the same inefficiency, the sweep of Asian range and then reversal.
Yes, that's it.
Yeah. How often would you say that shows up on your pairs? In this case, NASDAQ.
80, 85% of the time. And just look at the chart.
Yep.
Mark out your Asian range.
Mm-hmm.
Now wait for one side to get swept. Look how many times both sides of the Asian range get swept in the same day. You'll see 80% of the time it does it. So if you know that, just catch the reversal. That's it.
I think that is easily codable. So everybody that wants to do their homework can actually write a simple code and back this for themselves. Yeah. Which is like, for example, for many other concepts, for example, ICT concepts that pretty much everybody's trading nowadays for some reason. Everybody claims to have 80% win rate. This specific model has 80% win rate. This has 50% win rate, whatever. That can all be coded. And you can actually see the statistics behind it. And I think I saw the work of one guy that coded some inverse, some fair value gap.
Inverse fair value gaps. I use that as well sometimes.
Yeah. He coded it just to show up, like what happens if price runs through it before hitting a 1 to 2, something like that, which is, I guess, how people trade that. You don't trade that with 101. You trade it with...
I trade it with 1 to 15.
1 to 15?
Sometimes, yeah.
All right. Okay, and he like, just with coding, it's plain as day. You cannot fake it, and you see the statistics of the show-up rate. So that's probably one of the biggest problem in the educational side. And I talk to you as an educator right now. Yourself, you have a Discord community, just launched.
Yeah, literally on the weekend. No, not even that. Like 5 days ago.
5 days ago?
Yeah.
Right, so fresh. And I think that the biggest problem in the educational side of trading right now is when people teach something that they don't give the full context behind it. They pump it a lot. They pump it like this pattern is gold and has 80% win rate, but there's nothing backing that statistic, or there's nothing, no scenario, nothing whatsoever. Find this and you'll see 80% win rate. It's not true.
It's not true.
Yeah.
Unless you know where to look, I guess. There's always intuition behind it. So yeah, you could see a sweep of Asian high or low. Where you're going to look for that reversal, you might see your reversal pattern, but it doesn't work. But you need to know a bit more. So, for example, you need to know higher time frame structure. Daily candles, are they printing bearish or bullish? And then you also need higher time frame fair value gaps. You need to look at which zone are you getting that reversal in. Most people, they might see a trend reversal and they just take it, not realizing that higher time frame zones, you need to account for that. Where is that reversal taking place? So again, like you said, you can say just look for this and you'll get 80% win rate, but that's not true, because you need to have other little bits of information as well to get you that 80% win rate. So just a small little model on its own, it doesn't work with a high win rate, but you need to have that intuition and understanding of higher time frame. And it's just, you need lots of information before you get that 80% win rate.
So what would you say to an upcoming trader that is not yet profitable, not yet at the place that you are at right now, so profitable with $250,000 profits in payouts. What would you say is the best way to become what you are right now, trading wise?
I would say find a strategy from a trustworthy trader that you see online. Obviously, the person who's just flashing Lambos and stuff with some not so great strategy, but you don't follow them. Like, focus on a person that actually focuses on education, and you see he has a way of explaining things which is really nice and it makes sense. Once you find that strategy, back test it and forward test it, and journal down your wins and your losses. If you don't journal down your losses, it's not going to work because you don't know what you're doing wrong. You can focus on the winners, sure, but if you don't know where you're losing, that's gonna eat into your winners. So I would say focus on journaling the wins and the losses, because most people don't show the losses at all, or even look at that. For example, a trade could be winning, and a good trade, you'll screenshot that. A losing trade, you're not going to. You're probably just going to, if you do screenshot, you're just going to delete it later on, but you keep the winning ones. So again, focus on showing your losses, looking at them and analyze where you're going wrong. Over time, you're going to develop a trading plan which shows you where you lose, where you win, and how you lost and how you won. And from that, you just develop your strategy. So make sure you note down your losers.
You mentioned something, and I want to touch on a point. I want to ask you your genuine opinion. Do you think if, especially nowadays where we are seeing results being faked in any way, shape or form, in unbelievable ways, everything being faked, so do you think if that proven good results lead to quality education offered, or maybe that's not directly correlated?
It depends on the person, because they could have a really good strategy and they're really profitable, but they don't teach well, or they gatekeep. They don't teach you everything you need to know. Or it's like they make you pay a crazy amount to actually know what they're doing. I just give it out all there. I mean, I've already said it over here, basically what I do, so I've got nothing to hide. I'll just tell it how it is. So yeah, I mean, it doesn't matter if they are profitable, they might still not teach you how you need to be taught.
Yeah, that's big, and I agree with that, because nowadays it's such a big thing, trading education, and everybody buys the person. And it makes sense, because in sales, it's kind of like that.
Yeah.
Everybody buys the results, even if they are faked, even if they're not faked. In many instances, there are people that don't even know why they are not profitable, because probably they don't have the right approach to journaling and evaluate and implement during, based on your actual results and your performance and what you are trading. And they don't know that, and they keep being happy because they buy from a person that's actually profitable. Maybe it is, but doesn't. I mean, I can be profitable, and I can sell you shoes instead of a mentorship. And if you still think, yeah, I'm gonna be profitable because you sold me shoes, yeah, there's a problem with you.
Exactly.
Yeah. So yeah, interesting. And you mentioned you trade just that model of inversion after Asian range sweep, but you also said you trade something else. So do you have like different models?
I have two. So for London session, I do a break of structure, a change of character. So we can see high highs, high lows after we swept to Asian high, and then I just wait for a shift in structure based off a higher time frame fair value gap or an order block. So that's my London session. And then if I don't get what I want in London session, in a New York Stock Exchange session, which is at 2:30 p.m. UK time, I wait for the inverse fair value gaps. Those tend to work quite a lot after sweeping a high or a low.
Got it. So, okay, so you've, with these two models, you've achieved a lot.
Yeah.
I'm guessing that's not the end goal for you. So do you have any, what are your long-term plans and ambitions in trading, if you have any?
I want to stop trading. It's extremely stressful. It causes issues constantly. For example, just today, when I made the 9K on the FundedNext account, I was shopping for sofas with my wife. And I was just sitting there for minutes, just on my phone, looking at NASDAQ, because I took my sell. My brother was in the trade with me as well. And it was hectic. I mean, one of them hit my stop, then I had to enter again. So again, it affects my life in terms of I'm just there stuck to my phone. I'm meant to be shopping with my wife. You know, I've just moved houses, so you know I need to be doing stuff. But it eats into that, and then it changes your mindset. And after a loss, you know, it can get to, you know, you get a bit annoyed, you get irritated, and you can take that out on others. So I'd want to get away from trading.
Okay.
It's too stressful. For now, you know, milk prop firms as much as you can, make as much as you can. But then I want to move out into like just properties, something more passive where I just have more time to just relax and not be stressed all the time.
So your end goal in trading is actually milking prop firms and then shifting and using the profits to get into real estate.
Yes.
Interesting. Do you have any timeline in mind?
Timeline, if I've done actually I'd say I've did $250,000 in 3 months. The past 3 months before that was like 1K payout, 2K payout. Then it became suddenly a lot more. So if I can do that in 3-4 months, probably in the next year or so, start pushing in. I would say maybe in the next 2 years, quit trading.
Quit trading in 2 years.
Yeah.
It sounds like an interesting plan. First time I hear that actually, but interesting. I understand. It is very stressful, and especially if it impacts your private life, it can become more of a pain than a relief, and then kind of your business and your ambition. So yeah, I understand. I wasn't expecting that answer, man. I have to be honest.
I mean, maybe I'd go into like swing trading, very like low risk. I understand the charts, so even like 10 years down the line, I can look at a chart, be like, all right, I might just buy into this with a big stop loss, 1 to 3 over the next 2 weeks or something. Maybe like, because then that's not as stressful because it's just small bits of money here and there. But yeah, I just want to leave it.
It doesn't have to be small bits of money. Maybe it's more money.
Yeah, if the capital's large enough, then a 1 to 3 on a huge account, then obviously even risking 0.5% on a huge account, it's going to be worth a lot. But yeah, I want to quit trading.
Yeah, quit trading.
I don't like it.
By the way, you just mentioned $250,000 in profits in 3 to 4 months.
Yes.
Please explain to the audience the total asset under management that you had.
1 million funding.
Okay, so with 1 million funding, it was a 25% net performance, so probably gross of 30.
Well, let me clear up what I mean by that. So I got to 1 million funding, but the payouts that I was making before getting there, they already accounted for like $100,000, $120,000. Then I finally got to 1 million funding, but I wasn't trading all of it as 1 million. It was just trading like one account. Whilst the other just sat there. I wasn't trading all of them at once.
So yeah, so this is interesting now because everybody that I talk to that has more accounts, more prop firms accounts, has different approaches. So how do you manage your? I'm guessing you have 5 or more than 5 accounts.
Currently, I have 5.
Exactly 5.
Yeah.
Two.
Yeah. Oh, no, one of them is 100, 100, 200, 200. Then another 200. Then another, I think.
So 6 accounts.
I think maybe. I
Do
don't remember.
So before you were trading separately, one at a time.
2 of them together, maybe sometimes.
I get it. With a trade copier, or you were just executing manually on?
Manually, just switching between accounts.
And now you're managing and trading all together.
No.
You still do that?
I still do that. Yeah.
Right. Because I thought, by the way you said it, you were doing that before.
No, I still switch between accounts and trade them. So, for example, on an account that's up like maybe 6% or something, it's just sitting there waiting for my payout date. For example, the ZamcoCapital group account, that's a 200K one. I'm just waiting for my payout. I submitted it, I think, 2 days ago. So I'm just waiting for that. And even though I was trading whilst waiting for my payout date, I wasn't trading the ZamcoCapital one. I was focusing on FundedNext. So I kind of switch between, if one account's waiting for my payout date, I just leave it and I just trade the other ones.
Up until every account is in profit, and then you maybe come back, or you just leave it there?
I just leave it there until I withdraw the profit, and then I trade back on it again.
Interesting.
So I get 4 to 10% on the account and just leave it.
Do you ever, or do you ever burn accounts? Does it ever happen? And how do you recover from that?
I don't purposefully burn it, but yeah, I do lose
You don't purposefully.
some. Sometimes I do purposefully.
What do you mean? Hold on, what do you mean?
Sometimes you just get irritated. It's just like, you know what, I'm just gonna full port this funded account. I can't
Okay,
be
okay.
arsed. So sometimes I do burn it on purpose.
Well, it's not on purpose. You actually try, but
I try.
okay. Okay, I get it.
Recovering from the losses, I just buy another account and full port my daily drawdown. Try to pass quickly, like within 2 days.
Yeah. Does every prop firm allow you to do that? Because I'm seeing now some firms are changing.
So Quantec, they do 3% max risk, but I think on evaluations you can risk whatever.
Okay.
FTMO, they're annoying me now because if I risk more than 1%, they won't let me pass on to funded. So I actually passed phase 1 and 2, got to the funded stage, and then they told me, no, we can't process you because you risk more than 1%.
What did they do? Did they refund you?
So they gave me a free retry. I passed it again, and they said, no, actually, you'd risk 1.5% here. So it's just like, it's just...
So they gave you a free retry again?
Yeah. They just give you a free retry.
I understand, yeah. It's becoming a bit trickier because back in the day it was way easier. Now...
Yeah, all these rules are starting to annoy me.
Yeah. It's way harder to get capital. Everybody knows that you and the other guys don't full ports on, at least not openly, not publicly on live accounts on news. But yeah, but still, I kind of get why those rules are put in place now, because essentially the biggest cost for prop funds are traders like you.
Yeah.
So I kind of get why, and it's annoying.
Yeah, no, yeah. The rules are there for a reason. I understand that. I don't blame them for doing that. Obviously, yes. Otherwise, they just get milked again and again.
Yeah. Yeah, but transparency is key. Like that's the bigger thing. Like I wouldn't get annoyed if I got reset and there was written somewhere that I couldn't do that. Okay, and then they told me, and maybe I missed it. Okay, but if it actually was purposely made for me, I would get annoyed a lot.
Yeah.
Yeah. So I understand the frustration.
Mm.
Yeah, interesting. Do you feel you could have a shot at professional trading at some point in the future if you actually wanted to get into professional trading?
Not at my current stage, no. I still feel like I can be a bit impulsive. Those usually are my big winners, but still, I can be a bit impulsive and deviate from my strategy a bit. So I think I wouldn't, in my current stage, I wouldn't be up for that. Maybe in the future, but I am getting better over time, because I think at the beginning, the desperation for money, you tend to just revenge trade, try to just get your trades out. But once you have a bit of money sitting around, there's no urgency to get that money, so you can just stick to your strategy, take a bit more time. So I guess, yeah, still in the current stage, I don't think I'm up for that professional trading.
What would you say is your biggest struggle in trading right now? Your biggest pain point?
Sticking to 1 to 2 trades a day. I think sometimes I can take a loss, but because I know my strategy works and I see it, so my entry model doesn't show itself correctly, but I still take the trade. So I think that's my issue. I can just kind of deviate from that plan, waiting for my for the entry model.
Because I asked you this question because I got this answer from other traders as well, and one of them solved this by dividing the two trading models. Okay, so sometimes he would take trades on the only model that he had that was not completely coherent with that. So he decided, okay, let's just test them separately. Let's just divide the trading models with maybe 2 less confirmations on the other one and shift them so that I actually can monitor the performance of 2 different trading models. And he fixed that, and he now works with many more trading models because he developed a passion for developing trading models, evaluating them.
Okay.
And because sometimes we self-impose these maximum trades a day, but maybe sometimes it's not even backed by actual logic or actual market mechanics. Because, I mean, if I have a trading model that provides me on average 2 setups a day, sometimes it will provide me 0 setups a day, sometimes maybe 4. So why would I mean, I'm speaking from a personal standpoint, why would I restrict myself into not taking those 2 extra setups that show up that day just because I said, okay, I don't want to risk more than 0.5% a day?
Yeah, no, that's true.
Yeah, I'm
I get
kind of
you.
blocking the maturing of the equity curve of the
Yes.
model by restricting myself for that. And especially, what do you think, like for beginners, would you advise a beginner to take 1 trade a day or 2 trades a day?
At the beginning, I would say no, because you need to get the feel for the market. You need to try different entries. You get, it's just like feedback. The moment you enter a trade, you get your instant feedback if it's a win or a loss. So at the beginning, if you just stick to 1 to 2, you're not as exposed in the market. You're not going to learn as much. Just be in the markets constantly, and you get that instant feedback, and that's how you develop your edge, I guess, or your understanding of how the market moves. If you're always staying back and just waiting for your setup, or not even your setup, if you're just restricting yourself to 1 to 2, you're not going to get that feel for the market. So I think you should just be in the markets, like much more hands-on.
Yeah, because you're going to lose anyway, so
Yeah, exactly.
you better mature that experience fast and then start earning if your time comes.
Exactly.
Start
You
earning
said it
soon.
much better. Yeah, you're
Yeah.
going to lose anyways. So
Exactly.
do whatever.
Who doesn't at the start?
Exactly.
Yeah. Yeah. And it's interesting because you started at 17.
Yeah.
You're now 23.
Yes.
So you've been trading for 7 years.
Yeah. Yes. Almost 7 years.
Sorry, 6 years. My bad. You've been trading for 6 years,
Yes.
which is a lot of experience. And you became profitable 6 months ago.
Yes.
So after 5 years, I know many people that gave up after 1 year not profitability, 2 years of non-profitability.
Yeah.
What would you say to them?
Try harder next time. I mean, one thing I really, really hate is people that complain to me, I've been trading for 1 year, it's not working, I'm profitable, this is all a scam. I'm just like, shut up.
Yeah, shut
Like,
up. I've been doing this
Come
for
on,
5
I've been doing
years.
this for I failed for 5 years and you're crying about 1 year. Like,
Yeah.
please. So to those people that give up after 1 or 2 years, like, you missed out. I would say that you missed out.
Now that you're successful in trading, do you get family, friends that start kind of ask you, can you teach me? How can I get into trading? Do you get that?
He's sitting right there,
Yeah.
right there. My brother's sitting right there. He's just like, oh, give me a funded account and stuff, like, teach me and stuff.
Mm-hmm.
So yeah, I mean him. But other than that, most of my family don't really know.
Mm-hmm.
My cousin, he's been asking me, but he's still a kid, so I'm kind of holding that back. But not really. Most people don't know
Mm-hmm.
about the success part because I kind of try to keep it as hidden as possible from family members.
Because I want to connect to what you said before. I got many people asking me when things started going good, can you teach me? That knew when I started that I was doing that they were kind of, waiting, whatever, they didn't care. And then with the start, when things started going very good, they came back to me, they asked me, can you teach me and whatever.
Yeah.
So what I always say to people that are not into trading, that want to get into trading, I say don't.
Yeah.
Don't get into trading. You'll never make it. You have 0 chances. I don't have time to teach you. Regardless, it will be time wasted because you'll never make it. You know why I say that? Because I think that if the only reason why somebody could make it in trading is being stubborn. If you're not stubborn,
Oh, that's a good one.
yeah,
that's a
and
good
if
one.
you're not stubborn, you'll never make it. So if me saying to you, no, you'll never make it at the start will stop you at least trying, you'll never make it.
Exactly.
Yeah.
Yeah. It's good. It's interesting you say that because I've never thought of it that way, that you have to be stubborn to make it, because it's actually an issue with my wife. It's like she says I'm too stubborn. Like it makes sense because I keep going at it. I'm just stubborn. I'm just like, no, I'm not going to stop.
That's why you're here.
Exactly.
Yeah.
So yeah, but that's a really good way of putting it. You have to be stubborn.
That's why you are here, and that's why the people that left after 1 year, 2 years are not here.
You're
Yeah.
right. And it's good that you also say that you say to them, don't do it. Because I think the exact same thing. Whenever someone asks me, do you recommend trading for me? I just say, don't do it. Honestly, I would not recommend it to anyone.
Yeah, to anyone. Like,
No.
why would you?
Exactly.
Potentially the most difficult business in the world.
Exactly.
The success rate is so low. It's so low. And plus, to be in that top 0.01%, maybe less than that makes it actually consistently in prop firms too, which is, in my opinion, most difficult trading challenge if you want to treat them professionally without burning, because of the 2-week payout cycle that doesn't give you any time to mature the equity. It's so difficult. I think to get to that 0.01% is so hard. There potentially 5 to 6 years, sweat, blood, stress, everything. And so the chances of you being on that 99.9% are so high. There's not a type of person that you could recommend this to, besides being stubborn.
Yeah, you're right. I agree with you completely on that one. I wouldn't recommend it to anyone because most people, they will give up. They're not stubborn enough to go through all of that.
Do you think, because it's a big topic nowadays in trading, do you think psychology, let's call it that way, psychology is a big factor into whether a person makes it or not, whether in a profitability type of thing?
Psychology, I would say, absolutely is a huge factor. It depends how you want to categorize types of psychology. So what I mean by that is, if a person doesn't know how to react to a loss, things like that. If a person naturally is impatient or they get angry quickly, things like that affect their psychology. If they're not psychologically how they should be, they're not going to make it. Because, again, if you're a person that's quick to anger, you're going to lose, you're going to get frustrated, you're going to just flop. You're just going to revenge trade and you're not going to make it. So I think psychology is, absolutely key.
Yeah. So and I want to ask you something, because I used to say, a lot of people, like people that came to me for help, I used to say to me, my biggest problem is psychology. And I was like amazed, because I don't understand, what do you mean psychology? Why is psychology preventing you to being profitable? Because I do this, do that. And I always said to 95% of people that think that psychology is their problem, maybe you don't even have a trading plan. You don't even know what to do. So when it goes bad, it's a psychology issue. And when it goes good, you made a good analysis. But so you allocate 5% of responsibility to your trading plan and 95% on your intuition, which will never consistently for years make you money. So of course you will blame it on whatever else. But then, so actually, around 1 year ago, I started teaching trading to a guy that was into, it was not into options, it was into stocks or something.
Okay.
And he wanted to learn Forex. And we got something else going on, so I started teaching him for free. And the thing that I made him do was start with mechanical trading, manual.
Yes.
So like an expert advisor, precisely mechanical, it's codable. There's no possibility of different interpretation. Like exactly to the dot, you'll get the same results as the other guy that I'll give the same tools to, and you don't communicate with each other. So mechanical, manual trading. And the cool thing is, after 6 months of work in mechanical trading, we're now starting, after 1 year, we're now starting into the more fun part of trading, the actual more professional part of trading, which is not purely mechanical, and he has no psychology issues. He started executing that mechanical plan. He never had any psychological issues.
Okay.
Never a trade of a revenge trading, never a fear of entering the market, nothing. Why? Because the strategy was specific. He had 2 models, specific, mechanical to the dot. But then I see also people that have that and they just cannot stick to the plan. So I don't know what the problem with them is.
I think, that's interesting, because now you've made me think more into that. Most people, they learn very vague strategies. For example, support and resistance. Your support might be different to where I draw my support. Trend line, people keep adjusting their trend lines after every move. Yeah. So again, there's no concrete, this is the exact point every single time. So I think it's very ambiguous, those types of strategies. So when people learn that, that leads to intuition, and then that's where the psychology affects it, because now they're guessing. But I think, you're right. If you stick to purely mechanical, that will increase the probability of people becoming successful and not having psychological issues impacting it. But obviously, the people who are impulsive and they might not get their set up mechanically, they might feel the impulse to just take the trade regardless. So I think that's where the psychological aspect affects the individual. It affects, it's person to person, for example. So if a person is impatient and they don't get their setup even mechanically, they'll impulsively trade.
Yeah, and that's an issue because imagine you have an expert advisor, like a trading algorithm that's it's all season. You don't have to position it or decide not to apply it or not. Just all season, and you know that it makes money, which is like a unicorn. Doesn't exist. Like in classical way of thinking about trading, that probably doesn't exist. There probably are some guys that developed it and they keep it a secret. So imagine if you had that and you still had this impulse and you see that making money and you decide, no, let's burn it. And you enter manually and you burn it. At that point, I think you need a psychiatrist, not to work on trading psychology. So, yeah. And it's the same thing when doing manually. The problem with that is it's way more difficult to be profitable consistently. Yeah, because when you build a trading model, it's targeting something specific. And when that happens, you'll profit. When that doesn't happen, you'll not make profit. So there's no intuition as a filter. That's the problem with mechanical trading.
Yeah.
So yeah, psychology will probably forever be an issue, as long as people don't exhaust every detail in their trading plan with the trading models. Especially because pretty much if you're stubborn, like me, like I had huge over trading issues years ago.
Yeah,
huge over trading issues. You too?
Yeah. I still do. Yeah.
I can relate, and I think it's in our nature. If you are stubborn, you kind of are impulsive.
Yeah.
I never had fear of entering a trade. I had FOMO.
Yes, that's right. I've never understood people that have a fear of entering trades. I'm just like, well, why were you afraid of? Yeah, you'll lose a bit of money, but I've never had that about myself where I'm afraid, and people actually get scared. They get concerned for me. So it's like, how do you just enter trades? I would just see it, like, sell.
How do you not enter trades?
Yeah, how do you not? I just press the button regard. It's FOMO. I don't want to miss the move. I'd rather take a loss than miss the move potentially.
Yeah, so it's built in people like us.
Yeah.
And I found that the only solution for me personally was actually mechanical trading. My first ever payout was done with mechanical trading. And also I'm seeing that with the people that are in my circle. Mechanical trading solves everything, especially if you start from scratch just with that. You don't even develop those bad habits of over leveraging, over trading, which was mostly my problem. They don't even develop it. Yeah. So would you agree with me that to solve psychology, you have to go more in detail into technicals?
Absolutely. Yeah, no, 100%. I 100% agree with you on that. Even in my strategy, there's a bit of intuition, but again, I'm still waiting for specific things to show me. Now I need to take my trade. For example, if I don't get the change of character after we've swept the Asian high. If we are in the Asian high, I know I'm not taking a trade. I need one to get swept. Then once it does happen, I need this confirmation to tell me I can sell now or I can buy now. So again, so some element of mechanical is absolutely necessary for that. So I agree with you, mechanical definitely helps with the psychology aspect.
Yeah, and it's interesting because there are a lot of people now claiming they're trading mechanical. There are a lot of people on social media. It boomed like 1 year ago.
Yeah,
don't know how. And nobody's trading mechanical. And nobody knows what mechanical means. Like you can still if you have a trading model with your confirmations, that's actually normal trading. Yes. Not mechanical trading.
Yes.
I'm amazed. Like it's so rare to see normal trading plans, normal trading models that they now have to deem them as mechanical, even though they are not. And many people are so used to just having strategies. I don't like the term strategy because people they have 3 bullet points on there. They don't do any research. They don't gather any data. They say, this is my strategy, I saw it working, and I kind of have a interpretation for it, but too much interpretation, not the trader's intuition, the guess man intuition. And there's around this term mechanical, there's a lot of dust. It's being used very in a wrong way. Whereas just to define what normal trading should be. So having a trading model and having a trading plan like you have. Yeah. And again, we don't need to have mechanical trading plans to be profitable.
Yeah.
That can solve psychology, but then eventually you would want to insert intuition because it's way easier
It is.
to use filters on your mechanical trading models. Even at hedge funds, they have trading systems, not just the people working in it. They don't apply them every day. They have to position them. They have to filter the models.
Yeah.
So the search, the constant. There are also a lot of people buying expert advisors online. What do you think? What's your take on expert advisors online?
They have no adaptability, so they would never work long term. Yeah. Maybe in a short period of time they might work amazing, but the moment the market changes its behavior, it will fail.
Yeah.
I've had experience with bots because my friend, he used to have a bot. He still has it, but we all call him Nigel. That's the name we've given him. And
the bot or the friend?
The
okay.
bot.
Nigel.
Yeah, we call the bot Nigel for
Okay.
some reason. I don't know why, but we do. And the bot will do amazing. We will see like 2 weeks, oh my gosh, it's just turned this £100 into like 1.5k, just constantly, like little trades, scalps. And then a month later, when we actually deposit our real money into it, it just stops working because the market just keeps on going in a certain direction.
Martingale.
It's basically martingale, yes. Yeah. So again, that's what I mean. There's no adaptation for these expert advisors. It needs to adapt to the market changing behaviors.
Yeah, because like with manual trading, but there's no difference. Like me executing or a bot executing, we are both entering the market. We are both trying to speculate on some kind of inefficiency that the market presents. So every inefficiency has an anomaly. It'll never be evergreen. So of course you have to learn to position, whether it is manual trading models or expert advisors. You have to learn how to position them. There's no such thing as quick solution, especially if it's martingale. Martingale is great for range markets. Yeah, it's great, but as soon as you get the anomaly, which is trendy markets, you burn it.
Yes.
Yeah. So
that's where we saw the issues with that bot. It's the moment market starts moving in one direction, it just fails. It keeps trying to sell. When it keeps going up, it doesn't work.
Yeah, and it's natural because it just does what it's supposed to do. Yeah. Like every also manual trading model, they all do what they're supposed to. That's also funny. So people do that strategy hop, like I did, and like you did, like everybody did probably. They say, yeah, my strategy stopped working. No strategy stops working. Strategies have their normal performance cycles and normal down performance cycles. Strategies just do what they're supposed to do. And the more specific it is, the more positionable it is. If I know that my strategy, like this Nigel performs during consolidations, I'll try to apply that depending on the time cycle that I'm using, if it's day trading or whatever you may use it. I might try to want to position it when I'm expecting rangy conditions and not to position it when I'm expecting trend moves.
Yeah.
So, and that goes with all type of trading. That's professional trading. That's at the top. You have models, you filter them, and you position them.
Yes.
And it's both with manual and bot trading. This is not a get-rich-quick scheme. There's not I pay 2K for a bot, I'm expecting 10K this month. It doesn't work like that, especially if it's a martingale like Nigel.
Yeah, like Nigel, yeah. Feel sorry for him. He fails a lot.
Yeah?
Yeah. It was something you just said right now. When the market changes behavior. So my strategy that I have with NASDAQ, I noticed on 1 week at 7:30 every morning, it just swept the high and the low within the hour. Like it kept doing that again and again so quickly at the exact same time. But this week, so the past 2-3 weeks, I've been noticing the whole London session, it doesn't do it anymore. It's only doing it in NYSE. So again, I have to adapt to that. Bots can't do that. So I agree with you that, again, you have to look for the market behavior changing and you have to adapt your strategy towards that. The strategy works in a certain times like frame. For example, in a certain month, that strategy would work great, but you do have to change and adapt it depending on different market conditions. So yeah, no, I agree with you.
Yeah, it seems like it's a, I don't know, weird take because everybody claims I have the holy grail strategy, and I'm now referring to the retail trading space, because there's nobody saying this at a professional level, and maybe there's something behind. There's a reason for this, but it's everybody's claiming like everybody claims I have the holy grail strategy. Holy grail strategy. I have this. Yeah, that doesn't work. This works better.
It might work in a certain month. Like, other than that, I doubt you can just stick to that for the whole year. It doesn't work.
It's just a different strategy.
Exactly. It will change.
Yeah, it just does different things. Performs in different cycles and down performs in different cycles.
Exactly.
Yeah. It's interesting. This whole game that's been played online there's a war between who has the best strategy, and pretty much now people are, I think, they're waking up, and they're not listening to all people that claim I have a holy grail strategy. That all the people that feed into this conversation of I'm better than him because I have a different thing. I think people are now starting to realize that it's not about the strategy, it's about the approach and how you implement and improve during the approach. I'm not talking about psychologically or behaviorally, no, I'm talking about implementation on your trading plan. You have a trading model, you start studying the anomalies. When it down performs, you start to filter it and to position it. I feel people are now awakening.
I feel like people are getting smarter in trading now.
Yeah.
I'm starting to see that,
Which was way different like 5 years ago.
Absolutely.
For people like me, probably, I don't want to talk for you, but probably for people like you, everybody that starts trading.
I agree,
Yeah. So we've almost come to an end. I have one last question for you. Let's go back in time. You're 17 again. You just discovered trading. You don't know the outcome. You just have this bit of knowledge that you didn't have at 17. You knew that at some point you would make £250,000 in 3 months.
Okay.
What would you do differently, and how would you feel? Would you feel in any different way?
If I knew the outcome was certain that I will do it, then I guess obviously that would help. What I would do differently at that point would be. So are you saying what advice would I give to that 17-year-old me?
Yeah, why not?
I would tell him to stick to indices, NASDAQ, because currencies, they fluctuate. They change behaviors really quickly and they're weird. So I would say just, stick to NASDAQ, because I think that was my turning point. So right from the get-go, just look at NASDAQ, study NASDAQ, stick to that.
Interesting.
And know that this is the thing that will make you profitable.
Thank you, Armash. Thank you for being with us today. Thank you. You shared a lot of knowledge. I'm sure people will appreciate everything that you talked about today on this podcast. And thank you for coming, man.
Thank you for having me.
And we've come to an end of this podcast. Thank you for tuning in. I hope you enjoyed this. We'll have many more coming. And see you guys at the next one.